Okay, so hello everyone. In this video, we'll walk you through a detailed micro analysis or the IPO or the initial public offering of PT GOTO Project Tokopedia Tbk, better known GOTO. So this analysis includes four key sections such as the objective itself, the risk analysis, the business environment and performance, and its stock evaluation based on its trading strategies. So let's jump in. So going on for the objective of the IPO here, sorry. Uh, you can see that it was formed through the merger of two Indonesian digital giants, Gojek and Tokopedia, in 2021 before launching its IPO in April 2022. The initial public offering raised approximately like some sort of like 15.8 trillion itself rupiah or about 1.1 billion United States dollar, and is done by issuing 52 million new shares at the price of 238 rupiah per share. At the time the IPOs, the total market capitalization reached around 400 trillion rupiah or nearly 28 billion United States dollar. So the three main objectives of the IPO were to raise capital for expanding operation and technology infrastructure, to invest more aggressively in GoPay, the company digital payment platform and logistics, and repay its like existing financial obligation and strengthen the balance sheet. Okay, move on the risk analysis. Okay, sorry, where is it? Okay, so for the financial risk, uh you can see here that the quarter reported a net loss like 40.5 trillion rupiah in 2022 and 30.9 trillion rupiah in 2001. That's a 31% increase in annual loss. For the operational risk, like there are merger integration costs like 16 trillion rupiah across 2 years, and there are multiple round of layoff, like merging the technology system of Gojek and Tokopedia was a major challenge. For the market risk, there are two main competitors. We are Shopee, which operated by C Group, and Grab Holdings. Shopee holds over 30% of Indonesia e-commerce market share, while GoTo holds about 20%. Regulatory risk. GoTo is subject to Indonesian new data protection law. The investor sentiment risk is since the IPO, GoTo share price fell from 338 rupiah to as low as 88, a 70% decline. This will also shaken investor confidence to invest on GoTo itself. So for the business environment and performance, mm, as you can see, uh, the revenue growth on the first quarter is like 1.2 trillion rupiah, and the fourth quarter is from in the 2022 at going to 4.6 trillion, nearly four times higher in less than 2 years. For the gross transaction value, in 2000 it reached 13 trillion rupiah, a 30% increase compared to 2021. The main drivers are the e-commerce and the financial service. Okay, next on the operating expense in second quarter of 2022, GoTo's operating expense peaked at 10.4 trillion rupiah due to heavy spending on marketing, promotion, and platform development. For the net loss trend, GoTo net loss improved slightly toward the end of 2022, down from 6.6 into 5.4 in the fourth quarter. Okay, the KPI, the operating margin remained deeply negative at minus 250%. That is actually big. The contribution margin, which measures profitability of the direct costs, improved from minus 40% to minus 28% over 5 quarters. Customer acquisition cost is around 72,000 rupiah per user. Still high, but it will be decreased, of course. Next is the important part is the stock valuation and trading strategy. For the IPO itself, it's now in the price of 338 per share is the IPO price, and the current price is 88 rupiah per share, which is declining. The market capitalization has declined from 400 trillion into 100 trillion rupiah, a 75% drop, which is a lot, very, very a lot. While the valuation of multiples like the IPO to the price to sales ratio was 14.8. So based on recent data that I found, the ratio has fallen to 3.1 times, making the stock relatively cheaper, but GoTo is still not profitable. Okay, comparison with competitors is that Uh, like the C Group or Shopee's parent company trades are about 2.7 times price to sale, while Grab Holdings trades are 3.4 times. Goto is in the same range, but it has the highest loss compared to the revenue. Okay, so for the trading strategy, I suggest that if you buy, it will be when the price drops below 80 rupiah per share and quarterly revenue grows above 20%. You will hold if contribution margin turns positive in the next 12 months and the user base of Goto itself continues to grow. And you will sell if net loss exceeds 40 trillion rupiah again in 2004 or if new funding fails to materialize. So, in summary, Goto's IPO was one of the largest in Southeast Asia and it brought together two of Indonesia's strongest digital brands. It is potentially high, but the risks are also very real, especially in the terms of financial loss and the market competition. For investors, it's a high risk, high reward situation that require close monitoring of performance of metrics and agriculture. Why that's why trading strategy here are really important. Thank you.